So I want to provide the asset owner perspective, where Zurich, as an asset owner, sees the opportunities, what challenges we face, and where we think the Green Growth Action Alliance can help. So first, why is an institution like Zurich looking at green investments at all? And I think the starting point for us is that we are convinced that it is fundamental to Zurich as an insurance company for our long-term success that we apply our resources, our core skills in investment management, in risk management, in insurance to create value for all our stakeholders, not just for our shareholders, but also for our customers, our employees, and last but not least for the communities in which we all live and in which we operate as a company. And that's why at Zurich's investment management unit, we have developed a strategy for responsible investment, which in a nutshell tries to do well and to do good. Doing well for us means achieving our mission of generating superior risk-adjusted returns relative to liabilities. That's our mantra, that's the needle in our compass, and I think in the end, financial sustainability is key to everything else that we can do. But that said, I think we firmly believe that we can achieve this mission and at the same time really do good. And for us, doing good means having a targeted, tangible impact on society, on the environment, by supporting sustainable economic development. One way to do this is through so-called impact investments. So some of you in the audience may be familiar with impact investing. It's a rather new field in financial markets, and there is no generally accepted definition out there of what an impact investment is. But for us, an impact investment is made with the objective to create a targeted and measurable impact at a return that compensates the investor for the risk. And we firmly believe that such opportunities exist across the spectrum of all asset classes. One example is in the private equity space, whether it's small and medium-sized enterprises in the emerging world, whether it's things in the climate area, and I think we'll hear a bit more from Vikram about the climate catalyst funds. So these are types of investments that we're looking at. But the starting point for us has really been the green bond market. I think the projects funded by green bonds do deliver that very tangible benefit and are a great example of how private capital can be attracted to fund green infrastructure projects. But of course, as Vikram has alluded to, there's only so much that green bonds can do. In the end, with green bonds, the development finance institutions are left with the bulk of the risk, and there's only so much risk that they can take. Another area where we see a lot of potential to really do both well and good is infrastructure debt. And we believe that the vast sums that are required to finance infrastructure in emerging economies presents a great opportunity to invest both with impact and with return. And this is where the Green Growth Action Alliance comes in with its objective to leverage public and private capital to fund sustainable infrastructure. The challenges that Zurich as an investor faces in the infrastructure area is that this is really new for us, particularly infrastructure debt. Historically, this has been the domain of banks, and it is a fairly recent trend that has come about in light of the financial crises with the delevering and with banking regulation that infrastructure projects are now looking to new sources of capital. And unfortunately, insurance investment management can be a rather complex affair. By the very nature of our business, we are very much focused on asset liability management. So the starting point for our investment approach for everything we do is to first understand the risk embedded in our insurance liabilities. That means, by how much is the value of our liabilities change if interest rates move? Is there any credit risk embedded in our liabilities? How much illiquid assets can we hold given the expected cash flow pattern that is driven by claims, policy surrenders, etc. And for any difference between the risk composition on the asset side and the liability side, we need to hold capital. And to make things more complicated, all these liabilities and assets are held in multiple local operating companies that are overseen by local regulators, and every regulator wants to see a certain amount of liquidity, wants to see a certain amount of diversification. Before investing in infrastructure, we really need to understand the underlying risk drivers. How illiquid is a portfolio of infrastructure assets? How sensitive to changes in interest rates, to changes in the equity markets, etc. And this is difficult enough in a developed market context. In an emerging market context, add in political risk, whether real or perceived, add in exchange risks, other sovereign risks, and focusing on the green spectrum is adding yet another layer of complexity, again, around political risk, around technological risk, whether real or whether perceived. So to bring the risk of emerging market green infrastructure investing in line with the risk appetite of institutional investors will require, as Vikram has said, it will require some form of de-risking mechanism, it will require some form of pooling of projects, and it will require a lot of expertise in selecting the underlying assets. And devising the right structure and instrument to achieve this at scale, I think is quite a challenge. And as it stands now, some pilots have been launched, like the Agroforestry Partnership Fund, like other things. There is a whole number of institutions, of working groups that are trying to find the holy grail, to solve that riddle. A lot of ideas are floating around. But quite frankly, from an institutional investor perspective, it's a bit of a jungle. And every idea, every pilot is ever so slightly different. Many of them claim that they're green, but not many of them do actually try and attempt and measure the underlying impact or the development outcome, the environmental outcome. And all the while, a lot of institutional investors still struggle to understand the basic risks involved in infrastructure investing. So it's really to help find an answer to these kind of questions that Zurich has committed to co-lead the Institutional Investor Working Group of the Green Growth Action Alliance with the objective to taking a very structured approach at tackling the issue. So the first thing that we feel is required is to carefully map the universe of existing structures, of all the pilots, of all the ideas out there, because what we don't want to do is reinvent the wheel. Secondly, we need to understand the true risk embedded in a portfolio of green infrastructure assets, and importantly, formulate those risks using capital market terms, using a language that institutional investors speak and understand. Thirdly, I think we need to understand the exact institutional investor requirements, both in terms of levels of risk and expected return, and what kind of structure institutional investors can invest in given the regulatory constraints that they operate in. Fourthly, we need to identify those investment vehicles that match these requirements, and we need to present the case to institutional investors complete with data around risk and around return, so that institutional investors can make informed decisions because they're not going to commit capital on some wild idea. And lastly, we need to support the actual development and distribution of these instruments. So as you can see, the objectives are very ambitious. It is the holy grail that we're looking for, but I firmly believe that it is absolutely important to go through that structured thought process to come to a solution that can really be scaled.